stock Activision, ticker symbol ATVI. This is part 2. If you haven't seen part 1, go look at it. This will probably be a little bit more interesting, but you should start there. Nevertheless, everything I'm going to say in here is for entertainment purposes only, of course. I'm not a professional. Consult someone who can be your financial advisor. Okay, so continuing on the 10K, they are mentioning that in the second half of 2020, they're expecting, more stuff to the Call of Duty franchise, World of Warcraft expansion. So quite a lot going forward for 2020 that we can see in terms of them being able to generate revenue. Now, next in the 10K, now once again, this is for the 2019 10K, so we're seeing 2018, 2019 here. And the interesting thing you can see already is the breakup of their revenue is 30% the actual product and 70% is subscription and other types of revenue, presumably transactions within the game. And so 70% of that's a major chunk. And so you can see that, $6.5 billion in 2019 versus $7.5 billion in 2018. So it's gone down $1 billion. And most of that is specifically from subscription. And so as much as you lost $300 million maybe from product sales, wow, that is a major loss in terms of subscription. So it's one of those interesting things where, people can continue buying the product and nevertheless subscriptions can go down or other sources of revenue can go down. So something to really keep in mind there. Now, in terms of total costs and expenses, we can see that we have $4.8 billion, and that's lower than the previous year of $5.5 billion. So almost a $700 million gain, making up for that $1 billion loss in revenue, which is pretty impressive. Nevertheless, they have an income tax expense in 2019 of $130 million versus the $30 million from before. And so at the end of the day, what's pretty interesting is they have a net income of $1.5 billion versus the $1.9 billion. And so even though there's $1 billion in drop of total net revenue, which is quite substantial, it's only about $400 million in terms of a net income. And that's because they were able to make it up in the total costs. And that would have been much closer except for the income tax. So you can see how powerful income tax can really be at the end of the day when we're talking about the net income. And so anyway, why was there a lower net revenue? Well, first of all, they sold the whole Destiny franchise. So that might make up for some of those smaller subscriptions, for example, possibly. Nevertheless, they have lower revenues from Hearthstone and from Call of Duty, Overwatch. So all of them kind of winding down, right? We know Call of Duty is going to get a new update and Hearthstone is also going to get a new update as well. So it's very possible that they're getting fewer players, fewer interactions, either because people know a new title is coming. Although in Call of Duty's case, it almost seems like every year based off of just looking at the history. So I'm not sure exactly. It's just maybe people are playing less. I have no idea. Nevertheless, when we were looking at that income tax section, right, we said there was that 130 million versus 30 million. So what is that an abnormality? Is that what we're going to see going forward? So here they talk about in a totally different part of the 10K. Sometimes you got to hunt for this stuff. That in 2018 there was a one-time tax benefit. Okay, so it sounds like it's going to usually be this high in terms of income tax possibly. And if you go hunting throughout the 10K elsewhere, they say in 2017 the US Tax Reform Act was enacted and that brought income tax from 35 down to 21. So it sounds like as much as $130 million was an increase, it was not nearly as big of an increase as it could have been. And the reason why I'm bringing this up specifically is because remember that Biden and the Democrats, and whether you agree with it or not, they're looking towards increasing, the taxes on businesses, especially multi-billion-dollar businesses like Activision. And if they go back to that 35%, well, that's going to be quite a big jump, almost doubling that income tax possibly. Although, once again, who knows what loopholes will exist for larger companies to find their way out of these things. And there was a one-time tax benefit in terms of bringing in foreign money. So I'm not entirely sure how much Activision actually used, but obviously if they did, they benefited. Now, in terms of revenues by the geographic segment, I thought this was interesting. It's pretty well diverse. America has $3.5 billion. Europe, Middle East and Asia, Middle East and Africa, I apologize, is about $2 billion and $1 billion in Asia. So you can see there's a large potential in Asia for expanding, whether that's China, India, wherever it may be. There's quite a lot of room here. That's what it looks like. And we're going to see that they even bring this up, in fact. So now looking at the 10Q from October 29th, 2020, right? So that's the latest financial document I could find. We find out some more information. It's presented a little differently, and some really interesting stuff as far as I can tell. Well, first of all, you're looking at the revenue really being almost equalized between, Activision, Blizzard, and King. Everyone's around $2 billion. So from my perspective, that's kind of nice. It just means that they have, if one of the studios goes down a little bit, it's not, by 10% or whatever it might be, that's not going to be a massive hit because the other studios are bringing in so much money. But nevertheless, at the end of the day, I think it's a positive thing for them to be pretty well balanced. And in terms of the total change in deferred revenues, so you can see that Blizzard has a deferred revenue. It's going to take out $133 million. So once again, that's like one of those numbers that they just get to play around with in terms of what do they classify as, we're selling this right now and we're making the money right now, or what is that money, really considers that next year's revenue because, we're hosting the game online and we're going to use some of that money for hosting. It's always a little bit unclear, and, my guess is accountants have a little leeway here before something becomes fraud. And I'm not saying anyone's doing anything wrong. They might have their own perspective and they might be very well right. My problem is it confuses matters, I think, a little bit in terms of what's actually going on. Now, what I thought was really interesting and pretty impressive is when you break it up by device. So, Activision, they have 1.8 on the console. That's really Call of Duty, really, I assume. And in terms of Blizzard, they have, whatever it is, Warcraft, Starcraft, all these different things on the PC, 1.3 billion. And King, which is mobile games, is obviously about 2 billion on the mobile. So what's pretty impressive there is, that around $2 billion of income, or I should say revenue actually, is split up by each studio, by each company, whatever you want to call them, evenly by the device. Why is that so important? Why am I trying to stress that? Well, because if, for example, Activision wants to expand into mobile or wants to expand into PC, they have a company that has expertise, has years of experience, has all these things that can help them try and bridge that gap. Now, these companies might be somewhat separated, but the point still stands that they have expertise that they can borrow, that they can share, they can move people around. And we're seeing already Activision and Blizzard port some of their stuff to King Games. Activision bringing Call of Duty, for example, to King Games. And, King Games is going to release a mobile version of Call of Duty. And we're going to talk about it a little bit later on, but I think that's a really powerful thing for this company. Okay, now in terms of revenues, you can see in 2020, it was a pretty good year. For just the 3 months ending in September 30, they're already doing, $2 billion versus, the previous, which was $1.2 billion. And in terms of income tax, though, we're seeing $120 million versus $45 million. So, almost triple, or certainly double, but somewhere between double and triple in terms of income tax. And we spoke about before how that can make a big difference and a big impact on your net income at the end of the day, right? Because we're talking about $2 billion versus $1.2 billion or 1.3, and so that should be a $700 million difference. Except at the end of the day, for example, the net income is $600 million versus $200 million, and it's not all income tax. I'm not trying to pretend like income tax is the worst thing in the world, but it has an effect at the end of the day. After all the expenses and everything, it does make an impact. Okay, so in terms of net income, you can see that in 2020, we're looking at $1.7 billion for the 9 months versus $900 million, or just about $1 billion, I guess. And in terms of net cash provided by operating activities, you still have $1 billion and pretty much $1 billion. There's really $200 million difference here when you look at it's $1.1 billion versus $900 million, so a $200 million dollar difference. But in terms of that net income, you'd think that would be, at least a $600-700 million difference. So what's happening here? Why is the net cash, the income, only $200 million? So if we look at it, we can see that accounts receivable, first of all, went down considerably, right? So in 2019, there was a big bump in terms of income because or net cash, I should say, because the account receivable was $635 million versus $225 million. So this to me is a little bit of a red flag. I don't know exactly what's going on, right? At the end of the day, what's accounts receivable? Account receivable means someone owes you money. And so what happened to just drop that account by more than half? My feeling or fear is, my skeptical attitude is, Activision, Blizzard pretty much said to the people who owe them money, okay, you're going to pay us now, meaning we're letting you owe us the money. No, now we need that money. And so that money, that $400 million might be converted into, net income or whatever it might be. And so that account receivable is kind of being drained out to help in terms of the net cash provided, possibly in a different kind of loophole. But it just bothers me at the end of the day, if that wasn't what was going on and there is not some sort of hijinks going around in terms of the accounting, why do people owe them less money? Meaning, are they selling fewer products? What exactly is going on? So, it makes me a little bit concerned that number can jump so far. The next thing that changed quite a bit was deferred revenues. So how much deferred revenue is there? So in 2019, they had $800 million being deferred. So they took that income and said, okay, we're going to pass over $800 million to the future. This year, it's only $300 million. So what's going on there? That's a $500 million difference. In fact, that could help between, that $500 million difference, give or take, and the $400 million. So, we're talking about, close to $900 million, that alone could make up the difference between the net income between both years. And so, it's very possible that's what we're seeing, how these two net cash provided are kind of balancing each other out in terms of only a $200 million difference. And once again, it makes me nervous that deferred revenues went down so much. Why? Are there fewer subscriptions? Are there fewer people playing online? Which we know is not, we're going to see that's not true as far as I can tell anyway. In terms of statistics, it looks like it's very popular. All the games are just as popular, if not more, according to Activision Blizzard. So what's happening with these deferred revenues? Is there some accounting gimmick that's going on? Are people, trying to cover things up? I don't know. Once again, I get nervous with some of these massive changes in accounting that are not really properly addressed in the 10Q, as far as I could tell anyway. I'm not really accusing anyone of fraud. It's kind of a gray line between an accounting argument for how to perceive things versus a fraudulent action, I suppose. Right? Fraudulent action means that you really intended to lie and cheat versus, no, I really think that how we calculate deferred revenues has changed. In fact, elsewhere in the 10K, they mention that they do have a new approach in cloud computing arrangement and how things are amortized and everything. It's just it makes me nervous that, all of a sudden there's a change. And so that's going to now change all of the numbers. And this is something that, of course, was possibly suggested by the Financial Accounting Standards Board, right, the FASB, in 2018. They're only implementing now. Why now? Is there something they're trying to cover up, or is it something that they were just playing with to make sure it would look good for them in terms of the numbers? And so, you get a jump today, but maybe not in the future. And similarly, they're changing the guidance in terms of the goodwill impairment test, which we talked about before. And they adopted it in 2020 as a prospective approach. That makes me even more nervous because what does that mean? They're going to change back? They're going to go this way? They're going to go that way? It makes it really hard to follow the numbers. What's their goodwill? What are they doing? Are they trying to, once again, fudge the numbers? So on one hand, it's great that this company thinks about their stockholders, trying to focus on, we talked about in the first part, always making a new game, so there's always new revenue, so they're trying to smooth out that curve. Well, what happens when you try too hard? That's what gets me a little bit nervous about this company. Just some of the small practices or inconsistencies. Nevertheless, you can see here, software development costs went up. I think that's personally a positive thing. It means, there's a product, they're really trying to work on making it a more of a quality product and improve it more and more. I don't necessarily see that as a bad thing, especially as revenues are going up and income is going up. They mentioned there's a new release of Tony Hawk Pro Skater 1 and 2. We'll talk about that a little bit later. In terms of the MAUs, which I believe are pretty much the number of players that are on the system at any one time, it's actually gone down from 428 million to 390 million. On one hand, that's close to 10%, but on the other hand, I don't know how big of a deal that is to me exactly. Things are going to be in flux. People do different things throughout the months. Compared to September of last year, things are up. So maybe June, or, maybe there's some sort of seasonality to this. So, nothing I'm too concerned about, but something to keep an eye on. In terms of segment net revenues, you can see there was a big bump in Activision, $773 million. And that's an increase compared to the $200 million of the previous year. And, they have segment operating income of 345 versus 26. So that's already huge. These are the things that, you like to see in terms of the positive numbers. Sadly, one of the things that makes me nervous are how much fudging may or may not be going on. Here I thought was pretty interesting in terms of, things that they owe in terms of notes, for 2021, 2022. There's nothing really going on there, which I think is a positive thing. Nevertheless, they are, in terms of long-term debt, so how much money they owe on these notes, it's gone up $1 billion, but at the same time, they've moved forward those 2021 and 2022 notes, so in the next few years, they don't have to worry about them, which I think is really positive, especially with everything going on right now. It's always good to make sure that, debt is not going to catch you off guard if things go sour a little bit. Okay, so now in terms of the earning call, which was also the 29th of October, so Q3 2020, let's take a look at what they were talking about, the things that I noticed anyway that stood out. Well, first of all, they had the highest viewership of any Call of Duty esports event. So, we'll talk about it in the next video, the pros and cons about investing in this company, just a final summation maybe. It's really great that they have this going up. Esports is a huge thing. It might become even bigger, and that's a pretty powerful thing. The downside to me is, as far as I can understand, I'm not involved in these types of things, so I don't really know what's going on. But you do some cursory searches, especially when someone's touting something as a sales point and you get excited. Well, you have to look at is there something behind that? And the critical side of me says, well, as far as I could tell from what people were saying, when you logged on to watch Call of Duty esports, it actually helped you somehow in the game gain, some points or something like that. And so, they're almost bribing people to join. That's the critical view. And so maybe people don't really care about the esports event. Of course, on the other hand, maybe this is a genius marketing view. And hey, they don't actually have to spend money. They're just taking people who actually like their product already and incentivizing them to involve themselves in the esports as well. And now they really will like the esports event. It's always a little tricky. So it depends if you want to be critical or not. It would be nice if they got the highest viewership without doing anything. But I will hand it to them for trying to be creative. And, I don't necessarily, even if people were just logging on and they don't care, there's a chance that they picked up a few more viewers. And I think that's actually a good idea, personally. So they released Tony Hawk's, fantastic reviews, fastest title in the series to reach 1 million units sold. All right, so I think that's pretty positive. They're going to be launching Crash Bandicoot 4. Once again, positive reviews. So I think that's, a lot of positive stuff going on right now. In terms of King's newest title, they have Crash Bandicoot on the Run, which will launch in the spring, which is a positive thing, right? Once again, keep these games coming. They're releasing Crash Bandicoot, I don't know exactly on the console, but nevertheless, they're also doing a mobile game. So, once again, kind of playing with both of those titles and releasing them in quick succession. And that's pretty smart because if you have the console game, maybe you'll get the mobile game as well. You get reinvested in that type of character and vice versa. Now you get the mobile game. Oh, yeah, well, what about the console game? I remember I used to play that. And then you start thinking about it. What would be really neat if somehow these games could cross over in terms of somehow earning you points and things like that. I don't know if they're going to bother doing that, but it would be pretty neat, I think, for users, but also in terms of marketing. Once again, trying to incentivize people to really join into the intellectual property. So something to be considered, and you can already see based off of the previous comment about the esports event, they obviously have these types of things in mind. Okay, now in terms of Blizzard, they're going to release Hearthstone's Madness at the Dark Moon Fair, some sort of expansion, and the World of Warcraft Shadowlands expansion, Call of Duty Mobile. So once again, getting on this mobile thing has entered the final large-scale testing in China. And so once you see that, especially now that we have some time since this earnings call has happened, you can see the Zacks article that Call of Duty Mobile has been developed in collaboration with Tencent's Timmy Studios and generated more than $14 million in player spending in the first week of its release, which is pretty impressive. And, Call of Duty Mobile has become the fourth biggest revenue or highest revenue generating game in China, which is pretty impressive. So that means that Call of Duty Mobile was really successful. Once again, will this mean that Call of Duty, in terms of the console or the PC game, will similarly get that kind of grip in China? We saw that they have $1 billion in China. That could obviously grow quite a bit. I don't know exactly what's going to happen. China's very fickle. Sometimes they could just censor. They could just, take the game out entirely. Who knows? But nevertheless, pretty positive. In terms of Hearthstone Madness, also, you can see that it got a positive review, that, it's distinctly positive, the game, and it really adds to the experience. That, that's what they're saying. So that's the type of thing you want to hear, although you always do have to be cognizant that with a multi-billion-dollar company, they can sometimes get good reviews even when people are not really enjoying the games, because, these writers have to consider the fact that they'll be invited and be able to get, early access. So, you have to be a little bit cognizant. But nevertheless, it seems like positive things. I haven't been able to find anything extremely negative online. By all means, please do some Google research or whatever it might be, or if you yourself seem to know if Hearthstone, if this expansion is better or worse, would be great. Leave a comment. And while we're on the topic, if you enjoy this stuff, please subscribe, comment, thumb up it, give it the thumbs up. And it really helps me know that I'm contributing and helping other people. And I'd like to reach more people. I'm doing all this legwork and stuff for myself, but I really try and do it for other people who just want, some help or some insight, or, it's a lot of work, and I trying to share, and if it's going to be useful to other people and enough other people, that is what really helps me consider to keep going. Okay, so continuing in the call, so they mention here that marketing has, they've changed their reflect the scale and size of their own proprietary network, right? So they're pretty much trying to generate marketing within games to other games, and by making interactive content within one game for something else. And they mentioned generating a true virtual water cooler moment. I think that's all hype terms. But once again, you see this idea where they're trying to, instead of spending money on advertising, they're trying to go within their game, within the people who are already interested, and bring them over to the new game. I think that's really positive. Now, of course, they do have to still advertise to other people who are not part of the game, because they want to grow and not just continue trying to keep the same subscriber base. But I think that's really positive. And I think smart. You're seeing that kind of creativity in terms of spending money and getting people to move over. I think that's really positive. The subscriber base has doubled following the launch of Classic World of Warcraft last year, and the pre-sales of Shadowlands expansion are the highest that they've seen at this stage ahead of any release. So, qualifying it a little bit. But nevertheless, that's pretty positive. They might not know more until it's actually been released, actually been played for a month, to see will this outshine any other expansion. But once again, this is really positive things in terms of this product and this company. So as much as I mentioned, some of the shenanigans that might happen in the accounting, which makes me nervous, the products themselves are really powerful and seem to be really growing, and I think that's a really positive thing. I really can't stress that enough. So they are talking about how Modern Warfare content in Warzone and Black Ops and all these things can be used together. And so you can use your Modern Warfare stuff in Warzone and Black Ops stuff in Warzone, and, the games in Call of Duty kind of interact. So if you get the newest title, you can get a slightly older title, and the stuff you get in the slightly older title will work in what's called a Warzone, which I suppose is this other game where you can use your, the stuff you get and earn and buy from one game in some, I guess, I don't know, a game that kind of unites them all. I'm not entirely sure. Once again, I don't play these games, so I'm a little bit on the sideline, which I'm gonna say is a positive. Although I don't technically know all the little details going on here, and I can't say something from experience. I'm also not biased, so take that as a positive, although there is the negative that sometimes I had to research and look up what's going on in terms of these terms and words and games. But that's what I'm trying to bring to you, and I think everything makes sense. Obviously, if I've made a mistake, let me know. But I think, once again, this is a genius idea. They're trying to bring people from the games back and forth, and really trying. So, for example, if you buy Modern Warfare, and not only do you buy the game, but you buy things in the game, like whatever it might be, some weapon or some extra patch or badge or whatever it is, a uniform, skin, I think. So you can move that over. You don't just lose it when you buy the next game. Presumably, that's hopefully where they'll go with this. I don't know exactly, but at least in Warzone, you can use them. That's what it sounds like. What they really, I think, should do is they should actually migrate to that, even the new game, Black Ops. But obviously, they're a little bit nervous, I suppose, that if they do that, then in Black Ops, you might not buy those same features. So on one hand, they're trying to give people whatever they bought some more value and continue that value forward. On the other hand, you can kind of see the hypocrisy, and you could imagine that people might be upset a little bit. I can see it both ways. Okay, so here they mentioned in Call of Duty Mobile, and they're obviously seeing China as a big expansion, which I said was tricky, but nevertheless, Mexico and Brazil, so South America, they're also seeing installs and revenues from that. They see it a big opportunity. So, once again, they have a lot of opportunity, not just in China. They're not just focused in China. I don't mind the China focus. I just get nervous when companies, zero in on China, because China is very good at just cutting off companies, either for spite or because of, social control or whatever it might be. Now, here they mention Candy All-Stars, and they're having a tournament. I don't even know how you have a tournament in Candy Crush, but it's a competitive tournament, and it was limited in United Kingdom. Terrific results. So once again, you're seeing kind of that esports mentality now being carried over amazingly to the mobile world of Candy Crush. And I assume this was in person. I didn't really look it up. But whatever it was, this competitive tournament, it's a success. And, that's what you want to see. You want to see, this is, I hate to use the word synergy, but that's kind of what's going on here in a sense, that they're using ideas, creativity, plans from one group, moving it to the other. Okay, let's discuss insider trading, because this to me was a little bit of a red flag, but you'll make up your own mind. And then after this, we'll make another video in terms of the pros and cons, trying to give you a summary, and some of the stuff that's not part of the 10K, 10Q stuff that, the stock investor really should know about the products themselves based off of users. I mentioned that I'm not someone who knows. So, I did some sleuthing, and I think it's really important. And there's going to be a very strong bear position, I think, on this stock. But something that, once again, we can keep an eye out. And if it changes slightly, then that'll be a major sign to me that the company is really on firm ground. But okay, enough of that. We'll talk about that next time. A little bit of a teaser. So you can see there's a lot of red here, a lot of insider selling, and not just small amounts. So you can see at the top of the list, Wasserman Casey selling approximately 32% of their shares. Kelly Bryan selling 40% of their shares. That's a pretty substantial sale as far as I can tell. And then you have McCartney Claudine, 20%, not as big. Once again, Kelly Bryan G, another 30%. So quite we're talking about $65 million, dollars worth of stock sales pretty much within the year. That's pretty powerful. Now, in terms of, I believe this was, when I tried to look this up, this was Wasserman Casey. Just trying to remember who was the seller here when I looked it up. Pretty sure that's who it was. So if we look at Wasserman Casey's whole, yeah, that's exactly who it was. If we look at his whole selling streak, you can see I really wanted to draw in arrows. When did he sell? Is there, some kind of sign that you can surmise, like, oh, the stock's going down, he's selling right here? Well, I think yes and no. It's a little bit tricky. In terms of his sales record right now, so he sold the last time at close to the $80 mark, and then around the $70 mark before. So obviously those are generally highs for the stock. So at that $70 mark, that was quite high for the past 10 years. It only got a little bit higher than that in the previous year. So you can imagine maybe he's thinking, well, I don't think the company's doing much better than it was, before. I don't know exactly if that's what he was thinking. Once again, he sold when it got to the highest it had pretty much ever been, around that 77, and it was going, $77, and it was going down. Now it's bounced back. So I'm not saying that he's a stock market whiz. And that's the point, who knows with these people what they're really doing. He's a director. How much more information does he have versus the CEO? It's very hard to tell from my perspective. But you can see there's a number of times that he sold, for example, in 2018, he sold and then it did go down, and the next year it went down substantially. And so the pretty much the past 3 sales points, I suppose, 2018 and 2017, the stock dropped, quite a large, substantial amount since those sales. So those were very positive sales. And as much as maybe it could have gone a little bit higher, from $70 to $80, yeah, but that's better than the $40 that it was the year later, pretty much, or a year or two later. So, once again, it's really hard to tell with these things. In the 2016s, you can see that he sold at, about $45, and then the stock dropped to like $35. He sold before a 25% drop, and shortly before. Did he know something? I don't know. It's, these things are hard to tell. Now, if you can see, there's in the bottom left a down arrow. He sold over there at $11. Now, you might be looking at that, for example, and thinking, wow, this guy did the wrong thing, $11. He could have waited, you would actually have to wait, 3-4 years actually before it was, $20. But nevertheless, there were times that it was a little bit above $11, $13. And, he didn't wait. He didn't, whatever it is. And, maybe he's not such a guru at this stock and things like that. And we shouldn't be trusting him. And this is where it's going to get a little bit more complicated. Because besides people selling because maybe they need the money, but in fact, if we actually look at his sales in that time, so he's selling something. You can see over here, there's a disposition. He's selling at $11.50 pretty much. It's the second line over there, that 600,000 amount of stock at $11.50. Well, the line above it is how much he acquired that stock for. So that was $3.93. So, and this, I didn't screen capture every single sale, but there's a number of them where, he's selling it at a certain price, and maybe you feel like, oh, he could have done better if you wait a little longer or whatever it might be. But at the end of the day, he's acquiring these stock at, a third of the price pretty much. And so he's pretty much just selling the stock at absurd amounts of profit. And so, he might not care that much that it goes up a few more dollars. Obviously, it's always nice you get more money. I'm saying, in the grand scheme of things, it's an enormous amount of profit that he's getting. Because of stock options, right? As a director, he got these options that were valued at $3.90. And, as part of a director, presumably he helped grow the company, and now it's worth almost $12. And so he gets the profit from that. Just like all the stockholders do, if they held the stock from when it was, around $3.90. Okay, so, it's always a little bit tricky exactly what's going on. Obviously, he's sold before big falls before, but he's also sold when not before big falls. So a little bit tricky is that, what's going on right now. Okay, now that's not just it. That was for him. But when it comes to Wasserman Casey, this last sale that he's sold a third of his stock, well, he hasn't sold anything in the past 4 or 5 years. In fact, I think this might be pretty much his first sale in however many years that he's actually owned the stock. I have it screen captured here from, the past 4 years. So that to me is a little bit of a red flag. He's obviously selling at a very nice profit. Once again, stock options and all the rest. So it's always hard to tell what's going on and why is he selling? Does he just want the money? Or is it because he thinks he'll sell it now, buy something else that's cheaper, and this stock is going to go down in value, so he might as well sell now? Is that possible? Yes. Is it what's happening? I don't know. That's very, very difficult for me to tell. But a little bit of a red flag nevertheless. And then once again, McCartney Claudine, the only sale, but of course they've only had the stock pretty much for a year, and now they're selling at a high, or at least what was a high, and we'll see what happens if the stock goes down or not. So once again, is this a red flag? I don't know. This is only 20% of their stock. Maybe they're getting nervous. Maybe they just want the money. I don't exactly know what a chief people officer is. Maybe they feel like they may or may not, they want to invest in American International Group, AIG. I have no idea. Once again, it's always so hard to tell with these things. But a lot of selling of stock from some very big people. And, one of them who hasn't sold in, 5 years of having this stock, to me, that's a little bit of a red flag, makes me a little bit nervous. Even before the previous, fall of stock, in 2018, when 2018 was high before the fall, this person didn't sell. They're only selling now. Are they scared what happened before is going to happen again? Maybe. Or maybe not. I don't know. And that's always the tricky part. But something to consider in the grand scheme of things. And thank you so much for watching. Once again, subscribe, hit the thumbs up, leave a comment. Always really helps. I always really appreciate it. It's always really nice. And thank you so much for watching. And we'll get to the next part about really what's going on with Blizzard Activision in terms of the products.